Let me ask you a question. How many times have you had the perfect setup? Your analysis was flawless. The charts were screaming buy. But the moment you clicked execute, your hands started shaking. You moved your stop loss just a little bit lower, and then the market took you out right at the bottom, only to reverse 100 pips in your direction without you. Or maybe it's the opposite. You're up 20% on the month. You feel invincible. You size up, you overtrade, and within 48 hours, not only are those gains gone, but your account is in the red. The industry loves to sell you indicators. They want you to believe that the perfect system exists. But here's the hard truth. The best trading system in the world is worthless if the person operating it is broken. Welcome to the Trading Psychology Masterclass. Today, we aren't just going to talk about staying calm. We are going to dissect the neuroscience of fear and greed, identify the 3 mental killers that drain 90% of retail accounts, and build a psychological framework that turns you from a gambler into a disciplined operator. Let's get to work. Chapter 1. The Enemy Within, the Neuroscience. To fix the psychology, we have to understand the hardware. In your skull, you have 2 primary parts of the brain fighting for control when you trade: the prefrontal cortex and the amygdala. Your prefrontal cortex is the executive. It's logical. It plans. It says, according to my strategy, the risk to reward is 1 to 3, so I will take this trade. Your amygdala is the security guard. It is primal. It is designed to protect you from saber-toothed tigers. It does not know the difference between a tiger and a red candle. When you enter a trade, your amygdala sees the money on the line as a threat. It screams, "Danger! Close the position!" This causes the physical reaction, the sweaty palms, the racing heart. Most traders try to fight this by trying not to feel. That doesn't work. You can't argue with the amygdala. You can only reprogram it. The gap between your intellectual knowledge, what you know you should do, and your emotional behavior, what you actually do, is what I call the gap. 90% of trading losses happen because of decisions made in the gap. Chapter 2. The 3 psychological killers. Let's identify the 3 specific viruses that infect a trader's mind. If you suffer from any of these, don't feel bad. I want you to raise your hand mentally. We've all been there. Killer number 1, revenge trading, the spiral. You take a loss. It stings. But you're a fighter, right? So you immediately enter another trade to win back the money. Except you didn't analyze this trade. You took it out of anger. The market doesn't care about your ego. The market will humble you. Revenge trading turns a small, acceptable loss into a catastrophic blow-up. The fix. You must treat a loss like a completed cycle. Once a trade is closed, your relationship with that capital is over. You need a ritual. For me, after a loss, I physically stand up, walk away from the screen, and drink a glass of water. It resets the nervous system. Killer number 2, euphoric overtrading, the gambler's high. You just hit a massive winner. You feel like a genius. This is actually the most dangerous time to trade. When you are euphoric, your risk perception is 0. You start taking low-quality setups because you think the market owes you. The fix. The market doesn't know you exist. It doesn't know you had a winner. It doesn't care. After a big win, I enforce a cooling-off rule. No trades for 30 minutes. Let the dopamine settle. Killer number 3, hesitation and paralysis, the ghost. This is the trader who analyzes perfectly, marks up the charts, but when the entry trigger comes, they freeze. They watch the trade run without them. This is a manifestation of fear of failure. You'd rather not try than try and be wrong. The fix. You need to reframe your relationship with being wrong. In trading, being wrong is just a cost of business. If you hesitate, you are effectively taking a loss of missed opportunity, which is worse than a monetary loss. Chapter 3. The framework. Process over outcome. So, how do we stop the amygdala from hijacking our account? We shift our focus. The amateur trader is focused on outcome. I want to make $1,000 today. The professional trader is focused on process. I want to execute 5 high-quality setups today according to my rules. Let me explain why this is so powerful. If your goal is to make $1,000, the market can take that away from you. You have no control over the outcome. But if your goal is to execute your strategy perfectly, you have 100% control over that. Here is the practical exercise I want you to start today. It's called the Scorecard Method. At the end of every day, you don't ask yourself, did I make money? You ask yourself 3 questions. Did I follow my entry rules? Did I follow my exit rules? Stop loss, take profit. Did I manage my risk? Position size. If you answer yes to all 3, you had a 5-star day, even if you lost money. Because if you execute the process perfectly over 100 trades, the math of your edge will deliver the profits. If you answer no, you had a bad day, even if you made money. Because making money while breaking the rules builds bad habits that will eventually destroy you. Chapter 4. The Trading Plan, Your Bible. If you trade without a written plan, you are not a trader. You are a tourist on vacation in Vegas. You are gambling. Emotion lives in ambiguity. Discipline lives in clarity. You need a document. It doesn't have to be 50 pages long, but it has to be specific. Here are the 4 non-negotiable sections. The setup. What exactly are you looking for? I only trade breakouts above the 20 EMA on the 1-hour chart after a consolidation. The risk. How much are you willing to lose per trade? I risk 1% of my account per trade, never more. The schedule. When do you trade? I only trade London Open from 3 a.m. to 7 a.m. EST. I do not trade during news events. The worst case scenario. What happens if you hit a losing streak? If I lose 3 trades in a row, I shut down the platform for the day. No exceptions. This piece of paper is your anchor. When the amygdala starts screaming and you feel the urge to double down, you don't listen to your feelings. You listen to the paper. The paper is logical. The paper is the plan. You are just the executor. Conclusion and call to action. Look, the market is the ultimate mirror. It reflects exactly who you are. If you are impatient, the market will show you losses. If you are undisciplined, the market will take your money. But if you are consistent, patient, and process-oriented, the market will reward you in ways few other professions can. Trading is not about being right all the time. It's about being disciplined when you are wrong and humble when you are right. I want to leave you with this. The goal of this week is not to make money. The goal of this week is to execute your process perfectly, without a single emotional override. Just 1 week. Can you do it? If you found this masterclass valuable, hit that like button to let the algorithm know this is the kind of content traders actually need. Subscribe and turn on the notification bell so you don't miss our next deep dive on advanced risk management. Stay disciplined, stay process-oriented, and I'll see you in the next one.